one of the questions that we're getting a lot recently is in the first Trump administration, he paid a lot of attention to what equity markets were doing, and to the point where he might even change his public statements to try and support market levels and things of that nature. Obviously, over the last 30 days, we've seen a decidedly different market. At this point, the S&P is down 5% in that same period of time, and obviously the NASDAQ is down twice that. So is this a different administration with a different focus? I don't think so is the long-term answer, but there is obviously a fundamental change in how the government is going to interact with the private sector right now. Over the last 4 years, we saw government spending rise to around $7 trillion. That's really good for equity markets. That means capital is free flowing. There's easy access to it. And that means generally things are good for growth in that period of time. But it's actually bad for the bond market because it means we have to finance that in terms of debt, in terms of treasury issuance and things of that nature. So at the moment, it seems like the administration is more concerned with the bond market because they have to finance that debt that's already been spent. So the initial set of policy changes is around driving financial conditions to ease a little bit, making interest rates come down so it's a little bit more affordable for the government to refinance the debt that's already out there. And we've seen that happen. The 10-year Treasury yield is down over 50 basis points. So yes, there's a little bit of pain right now in the equity markets, but the long-term gain is financial conditions are easing. So things like mortgage rates and car loan rates are actually down that same 50 to 60 basis points at the same time. Over a longer cycle, this is not going to be fixed in the next day or two, let alone the next month or two, but over a longer cycle, as interest rates come down and those financial conditions get easier for consumers, then it will start to build back in a base of growth for the stock market as well.